Tesla's stock is it's really defying expectations. It's just hit record highs after a really tumultuous year, even surpassing its peak back in 2021.
Yeah, it is a remarkable turnaround. If you remember, Tesla started 2024 with its worst quarter in years, but then it just came roaring back with November marking its 10th best month ever.
It's really hard not to connect this surge to Donald Trump's election victory. I mean, most of the stock gains seem to have happened right after the election.
Yeah, the timing is definitely interesting, but I think we should delve a little deeper than just correlation. I think Elon Musk's active involvement in the pro-Trump campaign likely plays a significant role here. And we're not just talking about, financial contributions. He was really using his platform to promote Trump, even when it meant using misinformation at times.
Now he's at the heart of the new administration, heading the Department of Government Efficiency. I mean, that sounds powerful. What does that actually entail?
Well, this new department is essentially tasked with streamlining government operations. It's a pretty broad mandate, which means Musk has potential influence over things like federal budgets, staffing, and crucially, deregulation.
And that deregulation aspect could be huge for Tesla.
Yeah.
Particularly when it comes to autonomous vehicle regulations. Musk's been pushing for fewer restrictions in that area for years.
Exactly. And, some analysts like Craig Irwin believe this Trump bump, as they're calling it, is directly tied to investor enthusiasm about these potential regulatory changes. They see Musk's position as a sign that favorable policies for Tesla are on the horizon.
Okay, that's a bold claim.
Yeah.
Are there any specifics from Irwin's analysis to support that?
Well, Irwin points to a few key areas. For one, streamlining the approval process for autonomous vehicles would allow Tesla to deploy their self-driving technology much faster, giving them a significant competitive advantage. Also, potential cuts to environmental regulations could reduce production costs for Tesla, really boosting their profit margins.
So it sounds like investors are betting on Musk's ability to leverage his political influence for Tesla's gain. But isn't that a risky strategy?
Absolutely. It's definitely a gamble. If Trump's policies falter or face significant opposition, it could negatively impact Tesla. And we can't forget about the potential backlash from consumers who disagree with Trump's agenda.
So it's not just about potential policy benefits, but also managing the potential negative PR associated with Musk's close ties to Trump.
Precisely. Tesla's brand image is closely tied to innovation and sustainability. Aligning too closely with a controversial figure like Trump could alienate a portion of their customer base, especially those who prioritize environmental concerns.
It's a delicate balancing act for Musk. He needs to appease investors who are looking for those quick gains, while ensuring that he doesn't damage the long-term reputation of Tesla.
And we can't forget, even with potential regulatory tailwinds, Tesla still needs to deliver on its ambitious promises.
You're referring to their Q3 2024 performance and Musk's optimistic predictions for next year.
Yes. While they did exceed profit expectations in Q3 and saw an 8% revenue increase year over year, Musk is projecting a massive 20 to 30% vehicle growth next year.
And he's attributing that growth to the introduction of lower-cost vehicles and advancements in autonomous driving technology, right?
That's right. He believes these factors will significantly increase demand, but there are challenges ahead. Scaling production to meet that projected demand while maintaining quality is no easy feat. And then there's the question of whether the autonomous driving technology will truly be ready for prime time next year.
So while the stock market is currently celebrating Tesla's potential, there are real hurdles to overcome. It seems investors are putting a lot of faith in Musk's ability to navigate both the political and technological landscape successfully.
They are, and that faith is based partly on Tesla's track record of innovation.
Let's dive into that. What are some of the key technological advancements that have fueled Tesla's success so far?
One of their biggest strengths is their battery technology. They've consistently pushed the boundaries of battery range and efficiency, giving their vehicles a significant advantage over many competitors.
And their supercharger network plays a big role too, doesn't it? It's really given them a distinct edge in terms of charging infrastructure, and it's made long-distance travel much more viable for their customers.
Absolutely. And then there's their AI and software expertise. Tesla has been a pioneer in integrating advanced software and AI into their vehicles. Their autopilot system, while still under development, has generated a lot of excitement. It's been a key selling point for many customers.
It seems like Tesla has consistently been ahead of the curve when it comes to innovation in the EV space. But the landscape is getting more competitive, with traditional automakers finally getting serious about electric vehicles, and all these new startups emerging.
You're right. Tesla isn't the only game in town anymore. Established automakers are investing heavily in electric vehicles. leveraging their decades of manufacturing experience and vast distribution networks.
And some of these new startups are attracting significant investments and developing innovative technologies of their own. So can Tesla maintain its lead in this increasingly competitive market?
That's the billion-dollar question. To stay ahead, Tesla needs to continue innovating, not just in terms of technology, but also in their manufacturing processes, their business model, and their approach to customer experience.
They can't afford to rest on their laurels. The competition's catching up, and consumers have more choices than ever before.
Exactly. This next chapter for Tesla will be crucial. They need to prove they can not only survive, but thrive in a market that's rapidly evolving and becoming increasingly crowded. One area where they really need to focus is production capacity. They've struggled in the past to meet demand, and if they want to achieve those ambitious growth targets, they're going to need to significantly ramp up production.
Their new gigafactories are a big part of that plan, aren't they? They've been expanding their manufacturing footprint globally, with new factories in Europe and Asia coming online.
Yeah, those gigafactories are crucial for meeting global demand and reducing reliance on their main factory in California. But building and scaling up these massive production facilities takes time, and it comes with its own set of challenges.
And it's not just about the factories themselves. It's also about securing the supply chains for batteries, raw materials, and all the other components that go into making their cars. I mean, we've seen how supply chain disruptions can cripple industries, especially in recent years.
Absolutely. Tesla is not immune to those global supply chain issues. They've had to deal with shortages of key components. And that's something they'll need to manage carefully as they scale up production.
Another challenge they face is maintaining their reputation for quality. As they increase production volume, it's important that they don't compromise on the quality of their vehicles. We've seen other automakers struggle with this in the past.
It's a valid concern. Tesla has had its share of quality control issues in the past, and any major slip-ups could damage their brand and erode customer trust.
Especially with the competition breathing down their necks. Legacy automakers have a long history of focusing on quality control, and they'll be looking to exploit any weaknesses in Tesla's manufacturing processes.
And those legacy automakers have another advantage: deep relationships with dealerships and service networks. Tesla has built its own direct sales and service model, but it's still catching up in terms of coverage and convenience.
That's a key area where they need to improve if they want to attract more mainstream buyers. Many people are hesitant to buy a car without a convenient service network to support it.
And let's not forget about brand loyalty. Traditional automakers have spent decades building brand loyalty, and customers are often reluctant to switch brands. Tesla will need to continue to win over new customers, while also building loyalty among their existing base.
It sounds like Tesla faces an uphill battle, even with its current lead in the EV market.
Well, it's not going to be easy. They're facing intense competition from both established players and agile startups.
But you mentioned earlier that Tesla is known for its innovation. Are there any signs that they're developing new technologies or strategies that could give them an edge in the future?
Well, there are a few areas where Tesla is pushing the boundaries. They're investing heavily in battery research and development, aiming for even longer range and faster charging times. They're also working on new battery chemistries that could reduce reliance on expensive and rare materials.
That's crucial for making electric vehicles more affordable and accessible to a wider market.
Exactly. And on the software side, they're continuing to develop their autopilot and full self-driving systems. While those systems are still controversial and face regulatory hurdles, they have the potential to revolutionize transportation.
If Tesla can achieve its goals with those systems, it could give them a massive advantage over competitors.
But it's important to acknowledge the challenges and potential risks. Developing safe and reliable autonomous driving technology is incredibly complex, and it's unclear when or even if Tesla will be able to deliver on their promises.
And there are ethical and societal implications to consider as well. How do we ensure that these systems are used responsibly? How do we address the potential job displacement that could result from widespread automation?
Those are important questions that society will need to grapple with. As autonomous driving technology advances, it's not just about the technology itself, it's about the broader impact on our lives and our communities.
Okay, let's shift gears a bit and talk about the financial side of things. Tesla's stock has been on a roller coaster ride in recent years. What are some of the key factors investors are looking at when evaluating Tesla's financial performance?
One key metric is revenue growth. Investors want to see that Tesla is continuing to increase its sales and expand its market share. They're also closely watching production numbers. looking for signs that Tesla is meeting its production targets and scaling up efficiently.
Profitability is another crucial factor, right?
Yeah.
For years, Tesla was known for burning through cash as it invested heavily in growth. But more recently, they've started to turn a consistent profit.
Yeah, that shift to profitability has been a key factor in boosting investor confidence. But investors are still looking for signs of sustainable profitability, not just one-off quarters of strong performance. They want to see that Tesla can consistently generate profits as it scales up production and expands into new markets.
And how is Tesla's debt situation viewed by investors? They've taken on a significant amount of debt to finance their growth.
Well, debt's a double-edged sword. It can be a useful tool for financing growth, but it also comes with interest payments that can weigh on profitability. Investors are carefully monitoring Tesla's debt levels to assess whether they're manageable or if they pose a risk to the company's long-term financial health.
Another factor that can impact Tesla's stock price is market sentiment and investor perception. We've seen how Elon Musk's tweets and public statements can send shockwaves through the market.
Musk is a highly influential figure, and his words and actions can have a significant impact on investor perception of Tesla. His pronouncements about future technologies, production targets, and even his personal views can sway market sentiment.
It seems like investing in Tesla is not for the faint of heart.
It's definitely a volatile stock. It's a company with a lot of potential, but it also comes with a high level of risk. Investors need to be comfortable with that risk and have a long-term investment horizon.
It sounds like Tesla's future success hinges on a delicate balance of factors: technological innovation, production efficiency, financial stability, and navigating the complexities of a rapidly evolving market.
It's a complex equation, and only time will tell if Tesla can solve it. But one thing is for sure, Tesla's journey will continue to be fascinating to watch.
So it's clear that Tesla is operating in this high-stakes environment with a lot of moving parts, but their impact extends beyond just, balance sheets and the factory floors.
Yeah.
They've been really instrumental in shifting the entire auto industry towards electric vehicles.
Yeah, there's no doubt about that. Tesla's success has forced other automakers to really take electric vehicles seriously. I mean, they've shown that there's a market for high-performance, desirable electric cars, and that's spurred a wave of investment and innovation across the industry.
And their influence goes beyond just cars. Their energy storage solutions and solar panel business are gaining traction as well, contributing to a broader shift toward renewable energy.
Yeah, they really positioned themselves as a leader in the clean energy transition, not just in the automotive sector. And that broader vision has resonated with a lot of consumers and investors who are looking for companies that align with their values.
It's an interesting case study in how a single company can disrupt multiple industries and drive such meaningful change. But that disruption comes with its fair share of controversy.
Absolutely. Tesla's aggressive approach has definitely ruffled feathers, especially within the traditional auto industry. They've challenged long-held assumptions about how cars are designed, manufactured, and sold.
And Elon Musk's outspoken personality and unconventional leadership style have added fuel to the fire. He's a polarizing figure, but there's no denying his impact.
Well, he's a master of generating buzz and pushing boundaries, but that can sometimes backfire, as we've seen with some of his more controversial statements and actions.
It seems like Tesla's story is this constant balancing act between innovation and disruption, between pushing the limits and managing the potential consequences.
It's a high-wire act, and they've managed to stay on the wire so far. But the stakes are definitely getting higher as the competition intensifies and the expectations grow.
So what does the future hold for Tesla? I mean, can they maintain this incredible momentum? Or will they stumble as the landscape shifts around them?
It's impossible to predict with certainty. But there are a few key things to watch for. Can they scale up production without sacrificing quality? Can they navigate the regulatory hurdles surrounding autonomous driving? Can they maintain their technological edge as other players catch up?
And perhaps most importantly, can they continue to inspire and excite consumers and investors with their vision of a sustainable future?
Well, that's the ultimate test for any company that aspires to be a true innovator and disruptor. Time will tell if Tesla can live up to those aspirations.
It's going to be an exciting ride, that's for sure. Tesla's story is a reminder that the business world is full of surprises. And even the most established industries can be turned upside down by a company with a bold vision and the determination to see it through.
It's a testament to the power of innovation and the importance of challenging the status quo.
Goodbye and see you in the next video.